Why is UBS urging investors to maintain long positions in silver? The U.S. flips from silver exporter to importer for the first time. What does that mean? What does it mean when Saudi Arabia's central bank enters the silver market? How does silver's role in every U.S. manufacturing facility create an unbreakable demand foundation? I'm Joe Elkier. This is Tim Murphy. Welcome back to the Gold Spot. Tim, why is UBS urging investors to maintain long positions in silver, especially with specific price targets? And what does it mean for the institutional banking signals about silver's investment merit?
It's the largest private bank in the world, so it's a big deal, and they're jumping on the silver and gold bandwagon, right? Especially right now with silver, and it's again because of what we've been talking about in the past with supply and demand fundamentals are very bullish.
Tim, when the London settlement times are exploding and the U.S. has kind of seemed to flip from silver exporter to the importer side of things, what does this tell us about a disconnect between the ETF, the paper trading markets, and the physical reality?
What's happening is that entities are buying silver and they're buying contracts, paper contracts, and then instead of selling those contracts eventually, they're just taking delivery. They're taking the physical delivery now, and it's happening at an incredible rate. In London, it's so bad that what normally you would take one day to get the physical to the buyer is now taking up to 8 weeks, and it's which is unheard of. But now it's becoming rampant. It's breaking all records. So basically, they're taking delivery, they're taking the physical off the market, they're taking it with them, and it's not coming back.
Is that just more of a sentiment of people not wanting to be sitting in dollars, as we're seeing with the central bank?
Yeah, absolutely. This is driving it. That's part of what's driving the demand is the fear about fiat currencies and where the debt is taking us.
One of those things that's impacting possibly the London settlement times has been Saudi Arabia's recent movement into the silver, the ETF market. Can you tell us a little bit of what kind of impact that has had and where it takes us from here?
It's huge. Saudi Arabia is like back in the 70s when they were just completely immersed into the oil market, and they worked with the U.S., and that's how the dollar got so strong over time. Now you've got Saudi Arabia jumping on the bandwagon. They're buying silver ETFs, which is not the real physical stuff, but it basically are just following along the lines of what the BRICS countries are doing. And you've got China and Russia and India. They've been buying, their central banks have been buying for years now, and they were buying gold aggressively several years ago, and you see what gold did. Now they're stepping up to the plate one by one, and Saudi Arabia is the biggest of the big, so it's very significant. And right now they're buying in the mid to high 30s per ounce for the silver, and the expectation is we're going to be breaking 40 very soon, and we'll be pushing into record highs that really this year, and beyond that, it's you just pick a number higher up down the road. It's very exciting.
Well, with the amount of demand for silver in the U.S. manufacturing and, the EV market, the solar market's always been a big play as a reason or demand for silver. But there's lots of new markets that are also, pulling on the silver as well.
Yeah, the silver demand is off the charts right now. You've got military. We understand that for every Tomahawk missile, in the head of that missile is 500 ounces of silver. So it's like a monster box flying through the air that's going to explode, and we're never going to see it again. It's just this demand is growing over time. Demand is also growing for other things, solar panels and electronics, and it's just this green movement. It can only lead to more demand for silver. Then if we happen to have a bad situation, an economy that's failing, like maybe in the 70s, we had stagflation. And even during that time in the 70s, stagflation, silver went through the roof. It went from $4 or $5 an ounce up to $50 an ounce over a several-year period. And this is why the economy was stagflating. So then on top of all of that, you've got AI, and AI requires silver. It's it's in all facets of AI production and use, we need silver. So the demand for silver is not going anywhere. The supplies is dropping. Again, from a supply demand standpoint, a fundamental standpoint, it's the best situation you could have for a major bull market.
With supplies thinning, demand increasing, click the link below, request our silver report. There's never been a more important time to at least figure out how precious metals can help protect you. Lots of things happening out there. Give us a call, go to our website, request information. We're here to help, and we'll see you next week.
If you enjoyed today's Gold Spot, like or subscribe to both our YouTube and Rumble channels. Also, comment below if you have any questions or if you'd like to hear us talk about a specific topic in a future video.